Welcome back to the Talking Hedge. I'm Josh Kincaid, Capital Markets Analyst and host of your Cannabis Business Podcast. Today, we're going to take a look and see how the coronavirus has impacted the industry from stock prices to cannabis sales, as well as the investment industry for mergers and acquisitions. Obviously, that affects stock prices as well. And so all of that is going to be covered today. So we saw some companies get downgraded. There's 3 Canadian cannabis companies that got downgraded late February. That includes Aurora, Tilray, and Sundial Growers, all having their ratings cut, like I said, late February. News of their downgrade, resulted in a 6 to 7.5% decline back in February. Obviously, it's gone down a lot since then, as well as sales. So historically slow month for sales with 14.8% year-over-year rise in cannabis retail sales. That's according to a December Cannabis Retail Price Index, the latest report from BDS Analytics. And so even with the historically slow month, it looks like the legalized cannabis sales in the 5 largest markets reached a combined $574 million year-over-year increase of about 15%. A lot of this slowness is going to create some furloughs, which is laid off employees, as well as some canceled mergers and acquisition deals. So we're seeing Acreage Holdings furlough some employees, close facilities, and unwind some M&A deals, all due to the downturn being blamed on the COVID-19 crisis. So as a result, Acreage Holdings has their share price down almost 16%, latest cannabis company to announce business cutbacks due to the pandemic. So temporarily firing 122 employees. They're going to halt business activities such as wholesale operations in Iowa, their dispensaries in Maryland, North Dakota, and form factory operations in Oregon, Washington, and California, transferring its New York Queens dispensary into a delivery hub and abolishing the securities purchase agreement from Greenleaf, Compassionate Care, High Street Capital Partners in connection with the planned purchase of a Rhode Island dispensary. One of its executive vice presidents has resigned. They're retracting a previously announced financial goals and offering a full update. HEXO reported a net loss of $300 million last week for its second quarter, but it remains in operations. HEXO just completed a $70 million private placement of 8% unsecured convertible debentures and closed 2 registered direct offerings, generating $45 million. So they have debt offerings as well as a direct offering, so going straight to an institutional investor at $45 million with preferred rates on that. So that's all in regards to COVID, looking to shore up some more capital as they continue to try and operate, which helps that Ontario and Quebec have also deemed cannabis as essential. So it's quote unquote business as usual. All right, now diving into Headset's reports updating on how the coronavirus is affecting cannabis markets and how people are changing their purchasing behaviors. So edibles are seeing significantly more growth, a much softer fall than pre-rolls. So with most states prohibiting social gatherings, there's just not as many joints to be passed around. Having said that, edibles and Netflix probably go pretty well together. So the black line on this graph is a 0% change in sales compared to the average daily volume that you see in February and January, February. So in this graph, 0% would mean that sales growth was flat. So stores are selling similar to their pre-crisis levels. The immediate spike being the uncertainty if stores were going to remain open, the fall drop after stay-at-home orders were met, and then obviously an even bigger drop in things like pre-rolls, people kind of being scared of inhaling or burning, smoking, moving more towards edibles. So you get that extra bump there. So as people kind of stock up and hoard, then they come back after deals come through with text or social media coming back into stores, not as frequently, probably buying more and shifting their priorities from combustion or smoking to more edible products. So looking at this graph from the stores that are remaining open in California, you can see that the sales volumes have started to return to normal levels prior to the boom, the uncertainty. So last week, retailers saw sales increase to nearly 100%, so 2x of a normal day. During the most recent week, sales volumes have returned to normal with seasonal levels, with more retailers seeing sales that were on average similar to levels at the pre-crisis. Washington sales are very similar. So, taking a look at Washington adult use cannabis shops, they are also open, deemed essential operations, as long as there's social distancing. So, the demand remained high throughout the week, although softening over the weekend with sales at about 10% below normal levels. And so, even with that 10% decrease, you're still going to see higher than normal volumes as people kind of splurged, spent more, started to hoard it before knowing whether or not the shops were going to be essential businesses. And so myself, I went out and bought an ounce and haven't really smoked it. So maybe I'm projecting my own behavior onto the norm, but it might be something similar where people are hoarding flower and not smoking it. I'm using tinctures, I'm using vape, and not so much, no pre rolls at all. I cut way back on the amount of blunts I've smoked. So I have increased tinctures. I have increased some vaping, and wondering if some other folks are as well. So let me know what your preference is and how you guys are rolling. So, looking at Oregon with the median daily transaction size in Oregon retailers for 2020, you can see that from March 16th to March 22nd, the median transaction was over $40 every day. That's compared to closer to $30 in January, February. So, this represents a 35% increase in the typical transaction size. And that shaded area on the graph displays the 25th to the 75th percentile, meaning that more than half of the stores saw an average transaction size in that range, between 25 to 75% more than normal. Looking at Canada, you can see that the private retailers in Alberta, British Columbia, Ontario, they all saw similar sales patterns to America that we just kind of covered in the different states in the US. So we're looking at this analysis. You can compare the median store sales growth in comparison to the average daily sales from January and February. So you can see that on Monday, March 16th, it was pretty outstanding day with the median sales growth at 60% more than the average day at the beginning of the year. And most recent weeks of March 20th to the 26th, you can see sales that remain elevated compared to normal levels, but only slightly so, with Thursday, March 26th, seeing a dip in sales below average for that time of year. So really similar to the US, where you saw people running out, not knowing if it was going to be around, similar to toilet paper. So making their priority with cannabis. That then, after it was deemed essential businesses and remain open, you probably saw people reprioritizing what they needed to go out and buy, whether that's long-term food storage, whether it was toilet paper, maybe precious metals, looking at gold and silver, as some of those are running off the shelves as well. Either way, it's pretty similar regardless of where you go. So, going back to the US markets, we're looking at this graph that shows changes in the average daily sales by category in the US markets. So, here we're seeing sales of product categories that responded very differently to COVID. So, in this analysis, you can compare the average daily sales of each product category before and after. Across the US adult markets, the average daily sales at large increased by 10%. So it provides a good baseline to companies in each category against edibles, beverages, flowers. They're the only categories to have an average daily increase that beats the market at large, with edibles being the clear front runner at a 28% growth. At the other end of the chart, you can see pre-rolls and topicals completely missed out on the stock pileup, both having a 13% decrease in average daily sales volume between the two time periods, implying that customers were not focused on the product types, thinking more about stockpiling ahead of the potential time period of the quarantine. I'm a little surprised to see topicals not in there with tinctures and sublinguals, but it kind of makes sense. People want to have maybe more of a concentrated form, or just thinking that they can run out to CVS, Rite Aid, Walgreens, whatever, and pick up topical, a CBD. Not knowing the difference between full spectrum and otherwise, but that kind of surprised me. Pre rolls, not so much, because I do think that is a health concern that people don't want to burn so much. Although, again, flour gained 12%. And that's because people are running out buying ounces, I think. So, pretty interesting looking at the changes in the demand and what people are buying and how they're buying it. So, we're going to have to follow up with the headset data. Just all in all, looking at how the spread of COVID is affecting businesses. So looking at all the information and how this will impact the size and segments and purchasing behavior. But I would expect some pretty good deals to come along. So we're looking at an MJ Business Daily article where coronavirus impacts the cannabis industry's mergers and acquisitions, looking at a Harvest Health Verano deal, which was falling apart apparently. So taking a look at Harvest Health and Recreation, they planned an acquisition of privately held Verano Holdings. It was called off on Thursday with the company citing prolonged obstacles that include the coronavirus. So while COVID-19 was only a contributing factor, it was specifically blamed for the decision to terminate the deal on top of several other factors such as regulatory delays and difficult capital market conditions. Quote, now with the COVID-19 pandemic often being dealt with in the very agencies that must approve the transaction, it has become clear that this combination would not be complete within the estimated time frame. So this comes on the heels of MedMen's cancellation of its purchase of PharmCann and Cresco Labs, ending its Vidicam acquisition. So Harvest has also dropped its planned acquisition of California-based Falcon International. They restructured a planned deal with vertically integrated Can Pharmacy and closed an $85 million deal to buy Interurban. And I'm still waiting to see what the deal is with that. That Seattle-based company, Interurban, is also known as Habahart, and they had $175 million to run around with and buy licenses. And I think they had 20 different licenses in 12 different states. And so they had 25 million in friends and family. They went and got a Series A for 75 million, oversubscribed by 75 million. So it immediately opened up a Series B. So total, they had 150 million to run around with. And so only 85 million was the term on that. So either they lost a significant amount, $65 million, or there's money running around somewhere. Not really sure what the details on that are. But shares were down more than 10%, trading on the Canadian Stock Exchange after the termination of what Harvest and Verano called the business combination agreement was announced. But their shareholders will be able to avoid dilution from the proposed deal. So with that, we're going to roll this one up. I'm Josh Kincaid. This is the Talking Hedge. Don't forget to like, share, and subscribe, or don't. And I'm out.